Good morning, everyone. Welcome to the room. As you all know, trading futures involves risk and is not suitable for all investors. The information in the presentation is for educational purposes. It's not a trade signal service, not intended to be financial advice. Hope everyone had a good weekend. Wild start to our Monday. I guess not really a surprise, but definitely one of the bigger moves that we've seen in the ES and the Dow and the NASDAQ in quite a while. If we go back to the weekly chart, just to kind of get a sense of when the last real sideways movement occurred over the course of multiple years, 2015, 2016, and that's really where the last major swing low is. So you can see on my daily chart on the left, I've got the first thing I did was kind of go back to the most recent swing low that I could grab that had more than just one day of pullback. So that's down here. We kind of paused there yesterday at that 26.44 and then closed lower. We also have a couple of trend lines. I'll get rid of the steeper one that we finally broke. And the shallower one that I have here, that's from those same lows, kind of grabbing some of these swing lows on the way up. And it makes a pretty good 45-degree. So that's still a pretty stiff uptrend. Something I don't often do is pull up the moving averages. But if we go to the SPX, and let's go out a little bit further, we can see a clear break of the 50 moving average here. And we've dipped into it before, not really with this much oomph. We've dipped in just sort of with smaller body candles, down days, but nothing this big. If we go out a little bit further, we can see here's that 15, 16 sideways movement. And if you think back to 15 and 16, we still had a healthy economy. We still had growth kind of transpiring within this. So people always get sort of tied to this idea that the stock market is the economy, and it's really not. The stock market has a lot of leading and sometimes lagging characteristics that will sometimes foreshadow things to come, but they don't always line up with fundamental news or fundamental changes in the actual economy itself. So sometimes the market can sell off like this, but you think about your pocketbook and you say to yourself, well, things are going pretty good, and you got a raise at work, or maybe you're buying a new house or something like that. So sometimes it takes a little while for the market to move. Well, another big day here in store. We've got a gap down, and I thought there's, in these kind of situations, we get, sometimes there's opportunities to see a lot of gaps, and in these kind of environments, we you don't need to be overly excited and make longer term decisions that you make in these kind of situations can have a lot of longer term impact, and so just be a little cautious. I'm not seeing, and maybe it's due to a lag, but it looks like we've got a Dow minus 470, but it doesn't really look like 470 on the chart, but you get in these huge big body selling days, and we'll talk a little bit more about that as I kind of take in and we process some of the information that's coming in here. So lots to talk about this morning, both from the trading side and strategy for our intraday trades, as well as what to do with longer term trades, or maybe have some cash on the side that you're not really sure, is this the time to get in, and what do I do about longer term positions that maybe I took a big hit on. We'll talk about that in a little bit here too, but just trying to get a read on what we have going here in the markets this morning. You'll have a bigger disconnect with the futures as it relates to the actual underlying. And so we'll try to walk through here as the morning progresses. But in the 5-year here on the S&P, we have not dipped below that 50 on the weekly, and we haven't even dipped below the 20 period on the weekly chart. So it's easy to get caught up in the media hype and the headlines and all that garbage, but it's important to come back and zoom out, pull back to the larger picture, take a look at where is the VIX. If she ever loads for me here. So Abhi, the blue trend line, here, I'll go back to it in just a second. So if we take a look at the VIX, 5-year, we're talking this spike yesterday puts us in the mid 2015 range, and actually a pretty decent spike above 35, which 20 to 30 is pretty much prime day trading territory. 35 plus, is volatility, fear rather, not fear in light of the potential volatility. And so I would want to see a pretty decent retraction in that if we were to get a bounce. And a couple days ago we were talking, I guess it was last Tuesday. Let me zoom in here. Take a peek over here. So yeah, Dow minus 470, now plus minus 140. Go back to those two thoughts here. In the overnight, I was not seeing a lot in terms of actionable trade pre-market. We had sort of a triangle formation forming, consolidating, and then right here at the 2600, we'll call it, getting a little bit of a spike. I got a few more minutes before, 10 more minutes before we're at that quarter till point. We'll see if we can, we'll see what the market gives us. But all in all, I mean, pretty clean open in terms of some of the trends. It's going to be moving fast, and we're going to have, if you're looking at your dome here, it's going pretty crazy, especially in the Dow. It can be hard to actually place orders when your ladder's going so wild. So we were talking about last week how the VIX had a spike, and as it relates to now, it doesn't look like much, but we had a spike in the VIX, and the markets really didn't react quite yet. Go back to the S&P. the markets were kind of just sort of topping off or flattening off, but we already had a lift in the VIX. And a lot of times you'll get a spike in the VIX with just a small sell-off or just a little bit of a flattening. And that's usually a good sign that if we're at a top, going on here, a top in the market, or we've been going up for quite a while, the markets will, not sure what's going on with my profit charts. We'll do it over here. So the VIX spiked here on the 29th, and we had a couple of days, 1, 2, 3 days sideways, then the up day, and then another move, a little bit moved down, but for the most part sideways. And it was that day that we had the spike, and just we had down days and some consolidation days back here, but we really didn't get the same kind of lift in the VIX that we saw on the 29th. So that's something that I always use the volatility index to lead a little bit, and now we've got futures much higher than the underlying, so that's something to keep in mind. I originally thought, a lot of times on these big gap down days, we follow it with a big gap up day, but we're getting that big move up here, or relative to already where we've opened, where ES is a 51-point range already in the first 8 minutes. So as it relates to longer term trades, so I actually closed out a little bit of some longer term positions that I've had for a number of years that I didn't feel like were performing as well as they should have. They were, kind of pacing the market. And again, this is longer term stuff. So the purpose of that money is to kind of chug away and just, build and grow and reinvest dividends and things like that. So I'm taking money from primarily the day trading account. My swing trading account, I try and keep in there, grow it, and then trade more size. If I need the funds for something, down payment on a house, or more funds to put in to purchase a rental property or something like that, I may take some funds out of there just because it is a margin account. So I've got quite a bit of flexibility with that, but I try not to take much out of. That's more of a longer term growth account, but I am trading within it. And then I got my, what I would call my longer term investments, and that is that's more retirement age stuff. But so it wasn't performing as well as I would have liked it to relative to the market, sort of just pacing it a little bit. So anyways, I closed out a fair amount up in this region based off of what I was seeing in the VIX and based off of how quickly we had been moving up without a lot of opportunities, or really strong opportunities to get in on the intraday time frame. We have these runs that seem like they just came, the market started to move and then there was no substantial pullback. And so really on this whole run up right here from this consolidation at, we'll call it 2,700, all the way to 2,875, this was all chasing and frantic buying. And so then as the market starts to go down a little bit, those stops start to get hit, people start to get underwater. Then you have a big down day like Friday. People panic over the weekend. They try and get out early on Monday, but the market's already, you saw that lift Monday morning, and then, people think, okay, the market's coming up. Maybe I'm, closer to break even. I'm going to start getting out. And then you broke this swing low back here on the 10th, and then stops, panic selling, just a huge rush of selling coming in from all those who chased. So, those of us who were long from way back when, we're the ones essentially selling on this move up to those chasers who are buying on the move up. So that's something to keep in mind. And these things happen over and over and over again, but sometimes you forget, or people forget, because it's been a long time since a down move like this, what that looks like and how that transpires. A lot of money can be made in these situations. You just have to be a little bit patient, and there's no need to all of a sudden, if you're trading one contract, go to 10 or double down and just sell everything that you have because you're afraid that the market's going to crash. So we've had a huge surge back up all the way to 1-to-1 on the breadth. So balanced. I actually missed the reading at the open, but this kind of a move is pretty strong. So we'll see what we can get. It's going to be a fast-moving market. It's going to be a big range market, but with sort of two stop outs as our limit here. Maybe a little bit of slippage on a day like today. So keep that in mind. I would not trade the Dow today. So we'll see what we get here, and if we don't get anything or don't take any trades, that's okay. That's not it's not today's trading intraday, these big days, that you make all your money, or you make millions. It's just these kind of moves then add volatility to the market, which is good for trading, especially intraday trading. And you can see how quickly things are moving. Sometimes it can be difficult to just place an order and get in. So, but we'll be right alongside you here. The opposing from highs to lows is down, or is up at a 27.32. So I'm just going to note that. I did not get a chance to post the updated market profile. There was a shooting last night in Colorado Springs. My brother-in-law's a undercover officer there, and one of the other undercover guys got shot and killed, and a couple of the other officers got injured. So we were kind of trying to find out where he was and if he was all right. So I didn't get that posted, but I'll get that stuff up later today. He was all right. But I would look for, especially throughout this week, if we get any sort of pause. So let's say today, it's so early to predict multiple scenarios or put together multiple scenarios, but if we get a little bit of pause or rounding out here, may throw a little bit, just a tiny bit back in. And then, with the idea, if my profit chart loads, the idea that if the market does keep going down, not sure what's going on with the profits. Let's see if we go out to a monthly. It'll be more helpful. And we'll go all the way. Let's do 15. Okay, I just missed this little guy here. Pay attention. All right, so my apologies. We just had a little short setup, broke the swing low, came back up. What is this range? 63, 45. So decent range here between the 50 and the 61. So they're not so big that the 512 tick chart. I like that distance between here, the 50% and the 61.8, to be under 1.5 so that if my stop goes out at -6 ticks, it puts it up above or at the 61.8. If you've got a 3 or 4 point range, well, now you're getting into a trade, and before you even get a chance to see if you're right, the market will have to, your stop is going to take you out. So that's not a good place to be. You want to make sure that, if you ask yourself when you get in the trade, or if you're already in the trade and you're looking to place a stop, how would you know if you're wrong, or where would the market have to go to indicate that the trend is changing? And that would be where you want to place your stop. But here on the monthly chart, I know this is there's a lot going on here. We're kind of jumping back and forth to big time frame, small time frame, but I will post the recording so you can always go back and remember dashboard and grab a copy of that. But if we have, let me make this bigger. Is that 15 years? Well, let's go a little further. 20. Alrighty. So I've got a monthly chart. This last candle is not really applicable because it hasn't formed yet. It hasn't closed. We're only a couple of days in, but we've got the double top from the 2000 tech boom, the 2007 real estate boom. Then we've got this run up and sort of acceleration through, another consolidation, and then another screaming run up over the last couple years. If let's say we were to draw from lows to highs, that gives us sort of, the bottom of 2014, 15, 16 as an area of consolidation. Now, there's a lot more factors in this market and this economy that are stronger than we had in my opinion, just kind of looking at some of the fundamentals. Then 05 and 06 with the housing and the mortgage-backed securities and some of the leveraging that's been going on. Not to say that there's not overextending and people aren't living above their means, but if we grab, this is that low from 16 up to highs, there's room for us to come down without too much serious long-term trend breaking. And so, buying a little bit on the way down is okay, just like back in here. If you're buying a little bit as the market is going down with the longer term investments, just adding back in, while it's going sideways, you can collect those dividends and reinvest and keep contributing to your accounts. And so you're building and building. Your account may not be growing as much in this condition, or like back in 2008, 2009. Well, who cares if you bought a little up here, then you bought a little bit more down here, and then maybe you missed the bottom, but you bought a little bit up here, because you're adding and you're building your position through this environment, and then you can reap those benefits when the market does start moving rather than trying to chase. And we've seen that in the cryptocurrencies with Bitcoin, dropping down below 7,000. And if you look at where it was the last time, what was going on, a couple months ago when Bitcoin was running up through 7,000 and up to 10,000, we had a lot of chasing. So the market coming back down to those same levels after now those chasers who were buying it 10,000 plus got stopped out. And it's unfortunate, you never want to see someone taking out a mortgage against their house and line of credit and investing it like that, chasing emotional buying, and then getting all of that wiped out. So it's important to be smart. There's a lot of time to make a lot of money here if you just let things settle out and don't blow up your trading account in one day. Tomorrow I'll be doing a market profile webinar in the afternoon. I've got the link in the dashboard, and we'll talk a little bit more in depth about how you can use the market profile, talk a little bit about the last couple of days. Getting a lot stronger here on the breadth. So even though we didn't get that gap up, definitely a lot of buying coming in. And I know it doesn't seem like much relative to yesterday's sell-off, but think about how big Friday's sell-off felt and how small it looks right now. So whether or not we actually take back all of yesterday's move, the biggest up days typically come in the context of these down moves, and these down moves come right after chugging along just fine. You think things are all unicorns and rainbows, but that's when the rug gets pulled out from under you. So when we get into this environment, it's very important to really look for the swing highs and swing lows, even if they're just a couple of candles, and see if we can identify a little, like here, a little double bottom. You've got a swing high, market is low to high, pulls back to that 50%, then you can get in and start trailing your stop. Now they happen really fast, so really have to be watching and not talking, but NASDAQ is looking very. Now it was interesting last week. With some of the earnings coming out from the tech sector, and my profit charts may not be working here. But with some of the earnings coming out and some of the reasoning behind earnings from CEOs and things, it's been a little surprising to see some of this selling. But just by missing expectations, it's not so much about how well. When you get in such a strong market, the expectations just get stronger and stronger, and all of a sudden you miss expectations. It's like, if you're shooting for, you're trying to hit a home run in baseball, and instead of hitting one out of the park, you hit it to left field. It's still further than if you were just trying to get a base hit and landed at second base. So it's easy to forget that, okay, earnings, sometimes they're not as strong as we would like them to be, but they're still strong relative to where we're at. And so sometimes it takes people a little while to let that stuff digest and realize that life isn't ending. And Abhi, that trend line, that blue trend line back on the S&P, it's it really just starts at the beginning of the period. So I had a 5-year chart up there, and so it would be right at the beginning of that, 5 years, and then just taking, it was a non-exponential, so just even average across the board. Good question, Nicholas. So Nicholas is asking, is there a level on the VIX that you wouldn't trade, or I wouldn't want to be trading? When we get up into the 40s, at least that's what we saw in the down move in 2008, 2009, above 40, 50, 60, things can get pretty wild. All right now, but the VIX is back down at 25, and you're seeing, somewhat of a pattern here develop. So 20 to 30 is probably the ideal window, maybe even 35. I'm not taking this long here. I'm just using it to continue having a reference, and that way, okay, if we come down, break the 61.8, we can, look at this swing low. This swing low would really need to break in order to kind of flip here and be looking at longer term short. And even on this move up, we have not broken the swing high yet from yesterday before the close. It's a 15-minute chart. So, a little move up, perhaps a sell-off, some more panicking down to lows, and then maybe a double bottom down here, and then a lift higher. Or just some early morning buying and then another rollover and scream lower. But we're coming down into this October, November area that was a little flatter and a little more participation and consolidation. So that could act as support down here. And we've already seen that level of support once right at the open. Let's see what our trading hours only long looks like. 26:34.50. And why does that look strange here on the right? Huh. All right, so we've still got a ways to go for that. I'm also going to draw from highs to lows. See if we stop here at the, what is that? 65s. And if we do, might have a little opportunity for a short. Again, we're at the daily long, or the weekly long here. Potentially we bounced yesterday at the close right at it. And if we, I don't like to try and fight the bigger daily levels if we're getting a little bit of a reaction, but there may be an opportunity up here. So here we are back at our 65s. If we blow through and break highs, then I would expect things to continue that way for the next 30 minutes or so. See if we can come up and break this swing high. That's a 26.97s. Sometimes it's more important to just kind of digest things that are happening as opposed to trying to catch tops and bottoms in this kind of environment. And remember, the media is going to be trying to peg reasons for every single move now. Why did the market move down so much? Why did we go up today? Just ignore that. It's all, there's more guessing and speculating about why the market moves the way it does than actual speculation and trading sometimes. Markets move based off of the supply and demand and the fear and the greed of the individuals that are participating, and a move like this, almost an upside down V, straight up, straight down, people chasing a hot market and then getting out. It's real hard to say, well, so-and-so said this at this time, or the numbers of this report were trending, starting to get weaker over the last couple months, and all of a sudden the market reacted to that. Fundamentals take more time to build. Stock market moves are based more on emotions. As I'm sure you felt with, even if you're just trading one contract, you go from a sim account to a real account, and all of a sudden things change. You're going really well on the sim account, feel like you're making progress, and you switch to live, and you're up a point, and you get scared out of the trade, and you close out, and then it keeps going for a couple more points because you were afraid that you didn't want to lose money on the trade. So rather than patiently letting the trade work, you just kind of get scared out of it. I don't like these situations where, so this it can lead into a triangle formation where you have a low and a high, you come down and break the low, and then you break the opposing short here, and then come back into the long. There's a little bit less strength, but now that we've broken, let me draw up this guy here. It's a little bit more back and forth with both sides. If the bulls were able to hold us above the swing low or double bottom, then you have more strength in the pullback. But when you're failing longs and failing shorts back to back, you broke the long here, and then you turn around and break the short here. Well, the 61.8 of that short. Well, who's got the upper hand, bulls or bears? Well, neither at this point. But we are getting a stronger market internals, which is a good sign for the bulls, and we do not have a high ticket highs. Okay, so we do have a high tick that does line up with the high today. Didn't pull back all the way to its 50% yet. I'm going to keep that as a strong force here. 805, 805. High ticket highs. It's close. It's real close. So this 69, 68, 75s, it has a little bit wide range here, but with the high ticket highs, you may get something. We'll see if there's a reaction here. And it may drop before it gets there. So there's a 69. This is the first retracement that's traded before or after the high ticket highs. Now, just a little tick down, nothing to get too excited about. I'll draw the opposing, but we'll see if we spike through here to the upside or if we actually get a sell-off. So pausing at the opposing. Now I might move the stop down here. I mean, we may retest this 69s. We very well could, but if we test it and chop around, it might trade through. Now, you know what? I'm just going to leave it alone. 6 ticks to see a potential 6 points. Broken the opposing. We'll see if there's a reaction at the next. So this is the first 512 after the we'll call this the 15-minute. The bigger short has traded. Now we broke the opposing. It's actually a pretty textbook here. Broke the opposing 61.8. Now we traded at the 512. This is the first 512, and now that's getting a reaction. So there's still good structure in these wild days. You just have to be a little patient, and you can't just blow all your bullets in the first 5 minutes of the day. At this point, if we can come down and just break the swing low down here, that's a 57.50s. There we go. So now I take my stop and put it above, move it to 66.25. Maybe we'll actually go, here's one little swing high here. We'll go 62.25. That's already your 6 points. So 62.25. One, if you've got 2 contracts, I would do maybe a 26.53. Or, in this case, because it's so big, taking one off down here at 57s, that's still good reward to risk. Normally, I wouldn't say, just taking an arbitrary, or just start, if you've got 2 and you want to just start trailing each candle's high down here, something like that would be all right. That'd be better than just taking it off. Or you could use a 53, trail each candle's high and put your, so there you go, boom, there's There's the break of the candle high, and the second stop at a 62.25. Even though it's just a one candle up, I'd want to see if there's, I want that to hold if it's gonna drop. The next short here, you get taken out before the 61.8 fails. Okay, so here we go. If we get a double bottom, it broke. Okay, so now we'll go down to 50. We'll go down to 60s. So one tick above this swing high. So 26.60s. And close to a 53. Getting there. $68.75 to a 53 in about 5 minutes. Doesn't get much better than that in terms of the structure of this setup, both at the 50, and if you didn't hit the 50, taking the first 512 after that. Either anchor point was fine, here or this next low here. Both kept you in the trade. And now, so with even just as low as 2 contracts, if you whether you took the first one off just as we broke swing lows in this case because it was such a big move, trailing your candles high, or if you waited for the negative 23, the second one you can just keep trailing swing highs. So now bring it down to a where'd it go here? What do we got? 57s. And then if you've got 3 or any multiple, like let's say you've got 2 on right now, so if you had 3 total or any number more than 2, if you want to trail each candle's high and with one contract and then trail swings with the second, and especially when we get this kind of trade, you need to be trailing each candle's high. Sheesh. 20 points, 25 points. So just keep, I know it's moving fast, but just keep watching. So here's okay, there's the break. And so with 3 contracts, I would just trail swings with the last one if you've got one. So 42.25 on the last one. And hey, if you're 1 and you're in out at 56, I mean, come on. 68.75 to a 56, that's one trade with 1 contract. That's decent. All right, let's keep watching this guy down. Here we are at the retracement for the day, 34s. So if you've got anything left, any contracts left, my stop's at 42.25. This tiny little swing high. I guess, there it goes. So, well, that's it. All right. 68.75 to 42.25. Well, you can do all right with one trade. And you can do all right with one contract in some days. But, wow, okay, good move there. Give me a minute and we'll recap that trade. All right. Sheesh. The NQ is also at its retracement on the day. All right, let's recap here before this market runs and disappears on us and makes this move look like forever ago. All right, so what was our context, and then how did the trade set up? So market moving up in the morning, sort of moves sideways. This area of consolidation, this 4-bar sideways movement, is indicative, mimicked here, presented in the V reversal. We've got this double top. Market went into new highs on the day by just a tick or two, and then at that same time we got a high tick at highs. So we had a whole bunch of stocks in the NYSE moving up in one direction, and then boom, we get this little spike or big spike, and that's not sustainable. The market can't just swing so vigorously in one direction without having to snap back. Okay, so when it does start to snap back, we identify that there's a high tick at highs. This could potentially be the high of the day. So we zoom in, and I like to draw, the opposing low to high from the more major swing low. And we can also draw this little low to high as well. See if see what we've got for participation at the longs. But regardless, just drawing from highs to lows and trying to get in at the very first short and pulling down to the next one. This one traded up so close, but it was not filled. It wasn't until the anchor point down here that the market bounced, traded into the short. And again, same parameters, taking the number, rounding it down, and subtracting a tick. Once that short starts to sell off, we can draw the opposing, once again from lows to highs. And when that breaks its 61.8, we can take the first setup after the 512. So if you got in at the larger setup up here, great. If you didn't, you can quickly draw up the opposing, let the 61.8 fail, and then take the first 512 setup after that. And that one set up here gets you in the trade. A little bit lower than the other entry, but hey, that's okay. You're in the trade, you're at a low risk entry point, and then trailing your stop. Once we broke lows here, I like to use the negative 23% target for the first contract. That was a little ways away, but I put it at 53s on the the first bit. As we broke lows, since 68s to 58s is a huge move as it is, trailing each candle's high on the way down would get you out somewhere around 57s. So let's say you have just one contract, a 68.75 to a 57. That's a pretty dang good move. If you've got two, then you can trail the swing highs. So we've got one swing high here, a little swing high, swing high, swing high, and just keep trailing on the way down. And this was the one that got taken out up here at 42.25. Now down here, it happened so fast. I didn't have a chance to move my stop down above this little double bottom. If the market was moving slower, I would typically bring my stop down again, since we have a double bottom with a little swing high. But hey, there's no need to get overly greedy. Just take what you can get, and in a fast moving market like this, that's a pretty spectacular move. So that same analysis or process of going through the markets in that way, looking for a top, looking for a break in the swing low. In this case, we had a high ticket highs, which was a super strong indication of a short. Broke the swing low, traded at the 50%. If you didn't take the original 50, you can take the next 512 after that, and then just try and ideally trail swings. But if you've got two contracts, taking one off at the negative 23 and trailing swings is the default. A little bit of modification today because the move was so big. But if you've got three contracts, you can trail swing lows. You can take one off at the negative 23. And then when you get down in this big running situation, you can trail each candle's high, in which case, right here would kick you out down at 42s as well. Yeah, I actually saw the high tick up here. I didn't actually place a short at highs at the same time of the high tick, but I saw it mean, I noted it just by putting my cursor over and checking the time. Okay, boom, 8:05, boom, 8:05, and that was the indication that okay, time to start looking for a short, and when that short sets up, try to get in that trade. So it's not a matter of placing your order at the same time that the high tick trades. That's the signal that, okay, a high ticket highs could be the high of the day. Let's draw up a short. A low ticket lows could be the low of the day. Let's draw up a long. And so we kind of have that today too. We've got lows, and this happens a lot when we have a major move down or a big gap down. You get these extreme lows right at the open. And this morning, we kind of have, it's maybe a little, that was right at the open, 31 and then 31. So we do have a low tick that lines up with lows. Does that mean it's going to be does that mean the high and the low have been put in today and we're going to move range bound? Not necessarily, but we have good structure coming in, and we're getting, look at this triangle that just formed. And even on the bigger, we'll go to a 15-minute. You can see consolidation zeroing in on this 2644s, 2634s in this area, which happens to be the long from swing lows to highs, 50% daily long. So we may just pause here for 10, 15 minutes, and then the market sells off and people go back into panic mode. But there's no need to try and trade this consolidation. Too quick on the trigger. There's no need to try and trade in this consolidation and get chopped up when we can just take a step back, take a deep breath, let the market kind of settle out a little bit, look for the same setups that we'd look for if it was just a 5-point range day, a nice little 10-point trending day. We're just going through the same process. It really doesn't matter if the ranges are bigger, the volatility is more. And that's the great thing about a simple approach to trading. Whether you use the fibs or whether you look at support and resistance, it doesn't really matter what you're using to get in, as long as you can systematically go through that same process in different markets, different time frames, different volatility levels. That's what makes up a sound trading strategy. All right, so I'm going to get my market profile caught up here. So far, trading within the first 30-minute range, except for that little one, was it just one tick? 3 ticks. Traded into new highs above the first 30-minute range, so. So we've broken the daily long. Yeah, that's exactly right, Abby. If we break a long, especially like a daily long like this, then it's important to flip gears and be conscious of where a bounce into a short would be. Now, keep in mind, we're at this daily long. Now, it hasn't shown that it's over the course of multiple days has held. It's just been one day and this morning. And the short entry that we took earlier was very close to a high ticket highs, so it had momentum. Taking a short down here, may not, it's higher risk. If we bounce up into the short and it gets a reaction, taking a short up by 26.48, that would be lower risk. So you just want to constantly be kind of assessing where is the market at in relation to the bigger picture, so that you're not chasing the market. You never want to be in a position where you're chasing and trying to get in when the market's already made its a bulk of its move, or seemingly a bulk of its move. It's okay if the market keeps going and you're not in it. It's more important to have calculated risk, take calculated risks instead of trying to be overly greedy or overly aggressive. At least, that's kind of my approach. I'm a little bit more risk averse, but I understand that if you don't play, you can't win. If you don't, take some risks, you're not going to be able to reap any benefits. So if you sat in the sidelines in cash, well, if you do that for 10 years, you're likely worse off than you were by the time you had inflation. So I'll continue to draw the setups, not looking at this as a long. We do have a low tick, but it's not really the low of the day, and it's not even, it doesn't line up 36 and 37. But kind of getting a triangle formation, or at least getting some slowing of the down move. And now that could accelerate if we start to break below 2600, and then especially if we break down below 2589s. And so one strategy here, if you want to put a sell stop below lows at a 88, what is it, 88.75, or even if you put a sell stop at 2 ticks, so at 89.50, to try and get in if the market is going to accelerate to the downside. As long as you're using a 6-tick stop and your stop's going out automatically, it's okay to take stabs at the market in those kind of situations. You just can't hang on to it. It's got to be, you're in, and if you're wrong, you're out immediately. You can't get short down at lows and not have a stop in place and ride it for, a 10-point loss. So just be smart and be patient, and realize that when the market pulls back like this, all of a sudden there's a lot of opportunity to, add money to longer term investments and reap a lot of rewards over the next 5 years. It's not all about it's never about just making a quick buck. But sometimes, like today, things work out that way. Sheesh. The market profile chart is so big. It's a shame that officers have to, at least one officer yesterday, to lose his life. You know, the downsides about the undercover deal is they're not wearing vests and trying to blend in, and with these guys, so they were chasing a stolen vehicle with a parolee in it, and you know, when you're out on parole, you don't have anything to lose. You're going back to jail anyways, so they're usually carrying weapons and not afraid to use them, and it's definitely a bummer. So we can be lucky that on our bad days, people aren't shooting at us. You may lose a little money here and there, but you're going to live. One thing as I go back through the market profile, you can see a lot of the gaps that were below us getting filled, trading again. Now we'll have gaps above us that will be open, which is a good sign for potential move higher. And the market does not have to be making new highs in order for strength to be had in the economy. Does it mean housing prices might not go up as fast this year? Sure. But does it mean that we're going into a full-blown recession? Not necessarily. And even if we do, that's another opportunity to purchase things at a discount, purchase real estate, purchase stocks, purchase mutual funds, get into markets that may be depressed. I mean, that's what we do as investors. Look for opportunities, try and put capital where we see opportunities, and calculate a rate of return and expectations as best we can. Try to limit the risk as best we can. I haven't gone back and looked at the percentages from some of the drops in the recession. I guess we could do that together. All right, let's do that. So we'll go to a daily. Let's see if it'll give me. So yesterday was what, about a little over 4%. Even just 2015. So our ranges on the SPY. Let's do this. So beginning of 07, we had the kind of the little, not little, but big move down, and then another run up over the next, next year. We had a move, a 60-point range. Market was trading about half of where it was. So what do we got? 13.99 to a 14.50. So that's about a 3.3, a little over 3.5% down day back here. So are we at the retracement from the high to low? We'll come back to that here in a second. So keep in mind the long failed. Yep, we are at the high to low retracement here. Potential. Come on. Yeah, a little double top. 48 even set up here. What did we get to? 46.75 was the high, and 48 is that 50%. A little kind of double top, broke the swing low, pull back. A 40.25. Another short setup here, and let's see. Where the opposing is. We'll take the first swing low to highs. We did stop right at it. Lows to highs. So we did stop right at this next little long here, but that doesn't mean that the short, won't work. It's just there is buying coming in too. So keep that in mind if you're looking at the short, and it looks like the buying here is going to be overpowering the short. So sorry I didn't get that drawn up a little bit quicker, the short setup here, but 26.48 is the short high to low, not to take as a blind limit, but just that's where the 50% is. So we didn't quite make it there. We were at 46 and change. So now we're really in a predicament. We've got a short and a long right on top of each other. So and we've got a market with futures screaming above where the underlying is at, and a pretty balanced internals here. But anyway, so you can go back and look at the the daily charts and take a look at some of the other percentage down moves. But what I wanted to get at is if you look at the moves that we had in 07, and compare it to what we have now. So now let me go back as far as I want to. So 06, pretty strong, but some down within that. 05, strong real estate market, but look at the undulation throughout 05. 06 started strong, quiet summer, and then straight up into the end of the year. 07, we started to have some bigger down moves and signs coming from the fundamentals that the market was maybe on a little shaky ground, and that's when you had these big down moves of 3.5%, 4%. And if we continue, then we have the sell-off, and when we did, look what we have: short setup. So there's a lot of opportunities to come, regardless of the way that we move. And then once we do come down and make that big V reversal, gain momentum to the upside, and then zoom, big pullback, another 3-4% down day. Undulation over 2011, and then 2012 really started to kick up, and then 13, 14, 15, 16 were that sideways movement. 16, end of 16 starts to really ramp up. 17, just very tight range, straight up. And then now as we get into 18, a little bit of a pullback. So it's not to say that the uptrend is over and the bull market is over by any means. And you can really see here, I'll go back to the ES, the trend. Yeah, I'll be using in these conditions, if you want to go up to a larger tick size, just because there's so much trade occurring, that's totally fine. Like a 15-minute chart looks like a 5-minute chart might have last week. There's just so many trades that are taking place in this environment. So totally fine. Kind of see what works for you. Take some things and experiment. Always experiment on a sim account if you're trying something new, and then carry it over to live or incorporate it into your trading as best you can. I will put this afternoon's market profile link here in the chat box. So we got the short is holding, breaking down. So 46.25 if you want to try a stab at the next short. But again, we've got mixed signals here. We've got strong futures at the daily long, and the trading hours only high to low short. The long is already broken. And we're within the first 30-minute range still. So quite make it up there anyways. Where is that link? So this afternoon, that is at, what time? 6 o'clock Eastern Time. There is the link for you. And I'll get the market profile finished up for today, as well as yesterday's posted in the dashboard. And I apologize for not getting a video out either. I didn't really have enough time to process the markets to put together a thoughtful video with everything else that was going on. But we had some good, I think some good discussion today, and I know there's a lot happening real fast. So don't be afraid to go back and watch the recording. I'll get that posted in the dashboard as well. And if you have questions, also, feel free to shoot me an email. Those that are in the apprenticeship program, I'll send out a little bit more detailed recap of today's trade, and we can have some discussion there. And as always, have a great week, and make sure that you stay out of the trap, the emotional trap that you can get caught up into with these big down moves. Now there's going to be a lot more people talking about the economy just in general. And so you don't need to overdo it and try to overtrade it. One trade today was more than enough to put a strong start to the week. That is for certain. So I hope everyone has a good week. I'll talk to some of you later this afternoon, and we'll be doing the webinar later this afternoon and this evening. So have a great day, everyone. Be patient. Control your urges to act on your emotions, and instead, if you need to write things down, write how you're feeling down, or write, what you'd like to do, those impulses, rather than click the trigger, write them down, and then step away from the screen, and you come back, and chances are you'll feel a lot better about your decision-making process if you don't act on those emotional reactions. So have a great day, everyone. We'll talk to you soon.